Hey traders, welcome to Charts and Coffee. Hope everyone, I got a new mug on the way, by the way. Looking forward to that one. So I get a lot of mugs from these folks over at Death Wish, although I don't have Death Wish in this coffee. But got a new mug coming. It's a wolf mug. So looking forward to that one. I can add it to my my Viking and my Kraken giant mug collection. Looking forward to that. All right. As always, great to see everybody. Welcome to Charts and Coffee. All right. So just a couple things before we jump into the questions. Let's go take a quick peek at the economic calendar. What are those high impact, high heat hot zones that we're going to be dealing with this week? Well, unlike last week, we don't have many until Thursday. As you notice here, to get down to that CPI, core CPI release on Thursday. Of course, we have the weekly employment claims number, but those red hot zones. Remember that CPI is one of the macroeconomic pillars. The rate of change of CPI is one of the keys to understanding why the Fed fund futures may adjust between, as far as emphasis on March, May, and June meeting action. And again, remember, if that inflation continues to tick up, flat, tick down, you'll see those Fed fund futures react to that. So that's why those data releases are so darn important. And that's the main one this week. Why do we call them hot zones? It's the color, gang. Just taking a look at the color of the icon here at Forex Factory. So it makes it really easy to understand what's going to be high impact, high volatility. All right. So with that in mind, let's jump into the questions. All right. So first off, I've been on the toss charts quite a bit as of late. Today we're going to go back to some trading view charts. Again, if you're a member of the options room, the options gold room, the futures gold room, or my sector secrets mastery, head on up into the room drive of that chat room, and you'll be able to download a 3-panel setup that is what I've been sharing here in Charts and Coffee, including some of the labels and things like that. So check that out. And if you have any questions, feel free to ask me in the rooms or right here, of course, at Charts and Coffee. And that's the tops layout, the free indicators of my tops layout. Okay, so first up, would I say that it would be better to get your Workspace bundle or a quarter of the Sector Secrets Mastery? Wow, I would say the Mastery. You get a lot of good stuff in the Mastery. The Workspace bundle is great, but they're really two different things. I think I would always start with the education. And that's where the Mastery would come in. It's a chat room, classroom, right? So I would start with the education, and then I would, go into the tools. I think a lot of traders start with tools and then go to education. I would just don't, for no other reason, start with the education. So thanks for the question. Ian asks, what tech stocks would I favor to short? So index sector stock, right? So we know that the NASDAQ is in a downtrend. We know that the XLC is in a downtrend. We know the XLY is in a downtrend. So start there. It's all about the outperformers. Can you have outperformers to the downside? Absolutely, 100%. You can have outperformers to the downside. So looking at what my expectations are for that, I'll start in those corners of the market. And then I'll bring up my multi-charts. Then I'll bring up the heavily weighted stocks within those sectors. Throw SMH in there. You can throw CLOU, IGV. So really what you're looking for are the red over red, bearish momentum, bearish trend sectors. And then within those sectors, you want to find the red over red stocks. All right. So if you know where to look, Ian, that's where I'm telling you, start with the broader grouping, right? Focus on that sector. And then you can look at what's sort of leading the charge, what's the best weak name. You can have the best bearish structure, and that would then be a bearish outperformer. Okay. So in terms of My preferred, I mean, those are it. I'll be. Yesterday we bought a lot of stock or options, I should say. We got long calls in quite a few names, sent out alerts for quite a few long positions because we're not painting this market with one brush. We're not painting it with the, oh my gosh, rate hikes are coming brush, because there are corners of the market that are quite bullish. And there's some that are choppy, bullish chop, bearish chop, and there's others that are in a downtrend. So if we happen to get a move higher in the broader averages, that's when I start getting interested in, well, where is that distance closing to the short, the rip? In the meanwhile, with the weakness, I've been focusing on the long side of the market. So there's a little bit of timing also there for you. All right, after choosing the sectors to go long, short, how do I pick the individual stocks to take positions in? Just as I mentioned to Ian there, Azendi, I'm looking at outperformance. Does the stock sync up with the trend on the sector? And then I'll start to look at what has already gone through earnings, what has already gone through ex-dividend date. I want to make sure we're at least 2 weeks or more before earnings, right? So then it becomes a little bit more of a timing situation, but really structure always first. And if I can have a bearish stock in a bearish structured sector, that's that synchronicity that I'm looking for. All right, Speed Freak. How do I set up an entry for a trade? Do I use OCO or trigger orders? And do I use stop or stop limits? Okay, so order entry. Love the question. So when I set up an entry for a trade and I'm trading futures contracts, for example, if I wanted to, and I have been playing corn and bonds, right? I place a limit order to buy. I place a conditional order in the market. So that means I've got an order that is sitting there with a price associated with it. That's the condition, the price. And then if it's a correction to the downside, it's a buy limit. If it's a sell the rip, it's a sell limit. Okay. And then if it's an option that I'm looking for, what I teach in Sector Secrets is, look, we do things a little bit different in that I don't send out an alert that says, hey, I bought this. What I actually do is I send out an alert that says, I want to buy this expiration, this symbol, this strike, when the underlying reaches this price. So then what we do is we place an alert on, and I love to use TradingView for that. So I'll give you an example. See all those orange lines? Those are all different alerts. Those are all places where TradingView is going to tell me, hey, that price that you wanted to see, it's here. So I place alerts for options trades, but if it's the underlying stock, if it's the underlying ETF or futures contract, then I just use limit orders. In terms of what order types I use, I'm a big fan of stop orders for momentum moves and limit orders for profit targets and for pullback or retracement moves. And that's really it. I use very basic order entry, stop orders, limit orders. That takes care of pretty much 99% of what I do. And I never, unless there's just something crazy going on, I never use market orders. That's one thing I never do. All right, moving on. All right, what do I think of LULU? Sure. Or a short the rip, right? Sell the rip. Red momentum, red trend. That JT multi is telling me that I have both bearish momentum, bearish trend. That's a short the rip. Absolutely, Matt. So what do I think about it? I think that on the first, the second, and the third, that was your window. That was a minor high. And we're in the midst of that follow through from rallying up into the wave and now looking to head lower. So I like it. It's triggered. Beautiful pattern. And yeah, I would look for at least a move initially to about 319.85 and then, maybe get down and start testing the 300 major psychological level. All right, Justin, I have your workspace loaded and just been following the last few weeks. Smaller account here, so I don't have the margin to swing overnight. And scalping. Well, scalping and overnight, for me, Justin, are not the same thing, right? Scalping really is a short-term 2-minute, 5-minute intraday tactic, while swinging overnight, taking the retreat. Swing is what? Swing. The word swing I try not to use, but it's such popular jargon. What is a swing? If I ask 10 different people, I'll probably get 10 different definitions. So swing is synonymous with the retracements in a trend. That's the way I look at a swing trade. But swing trades probably more generally have turned into uh, an overnight trade on a longer term time frame. So scalping is usually intraday. Swing trades are usually longer duration time frames, longer time horizon. If you don't have the margin for futures, which let's face it, a lot of folks don't, use the micros, use the options and the ETF alternative. There are ways. And so that's a lot of what we do in the mastery. How can we work within a budget, right? I don't want anyone thinking I have a small account because I think that is sort of a disempowering, unempowering mindset. We have a scalable account. So if we can think about budget and we can start empowering ourselves with, hey, what's my budget? What's my risk tolerance? And then it's going to change what kind of symbols you look at, what is affordable, right? Budget and affordability are, two words on the same coin. And it changes what you're able to do. And even better, it reduces the likelihood that you're going to blow up an account because that is not a rite of passage in trading. That's just a basic misunderstanding of risk and position sizing, which is something we emphasize for sure. And then what you're doing are building the habits that will work for you as you go from maybe a 4-figure account to a 5-figure account to a 6-figure account to a 7-figure account. And I've been at all those levels, right? And you want something that's going to keep allowing you to scale, right? We hear that in business all the time. Is that idea scalable? Same thing with trading. As far as the best time frame, 2 and 5 intraday. And then I look at the daily. I only look at 3 time frames, gang, 2 and 5 when I'm day trading and daily when I'm quote unquote swing trading. So thanks for the question, Justin. All right, next up, Jamie. When focusing on the daily chart, how many days out do I like to buy my calls and puts? Minimum 45 days. Because remember, inside 30 days, time decay starts to kick in. Inside 21 days, now it's rolling. And inside 14 days, your time decay monster is absolutely clear in the rearview mirror. And to offset that, we better have an in the money momentum trade, meaning momentum in the direction of our option working for us. So really things start to get pretty dicey inside 21 days. Give yourself the luxury of time. And by the way, why don't traders give themselves a luxury of time? They miss that step on budgeting and affordability. They're in a small account, but they figure the only way to grow it is to swing with Google and Booking and these more expensive stocks because they can move 20, 30, 40, 50 points. But look, you can buy 10 $1.50 options, scaling in and also move the needle that way. I like inexpensive options, not because we're small account trading, but because we're scalable account trading, right? So, and another thing I want to mention, I don't know that a lot of people know this. I use a cash account. I use a cash account in the Sector Secrets Mastery. When I'm day trading, even in the futures room or in the mastery, I use a cash account for my options trading. You have to use a margin account for futures, right? You have to. But for my options trading, I'm long calls and long puts only. So I use a cash account for that. I don't have to worry about pattern day trading rules. I know what's in my account is the extent of my risk. It's a nice way to sleep at night. All right. Where do I log in to see that calendar? Isaac, you don't have to log in anywhere. Just go to Forex, Forex factory.com. And that's the calendar that I've been using for many, many, many years. You can check it out there. All right. AMD for a short. AMD. Let's take a look. All right. First of all, structure before strategy, right? And price before indicators. Keep those two in mind. Structure before strategy. Structure dictates strategy. And price first. Secret squiggles second. So AMD, yeah, I like AMD for a short. We've got earnings in the rear view mirror. We're inside the wave. The only thing that may be a challenge and perhaps an initial target could be that 200. Could be that 200 exponential. But this is definitely a red over red market, meaning individual stock in an overall red over red sector. So I like it, JR. Pretty much where we're sitting inside the wave. As long as we're inside the wave, that works for me, the 34 EMA wave. All right, Kim says, love that tops layout. Look, the tops layout dates back to, gosh, the beginning of my career. And then we've automated a bunch of things. And then come 2016, 2017, we released the tops layout, 4 different free tools. Again, if you're in the membership, I've shared this specific layout in TOS. And then if you're not, that's okay. Still got you covered. Head on over to countdowntrader.com, and you'll see on the right side, you could download the propulsion, grab, wave, and Darvis 2.0 indicators. And that is very much at the heart of what the TOPS layout is. All right, could I please explain my momentum and trend indicator again? Tom, sure. It's there's 2 of them. What I give away for free is the label, the trade flags. We call them trade flags, those labels in the upper left-hand corner of TOS. And the first one is measuring 8/13/21 for momentum reads. The second one for reading the 34. That's my trend read. That's why we separate them. I'm not interested in looking at all those moving averages lining up, because that's actually going to give you a delayed and oftentimes incorrect read on what's really happening in the market. We have to separate momentum from trend, and that's why we always have 2 rows of the JT multi, and that's why we have 2 labels for the JT trend trade flags. So it's really measuring those moving averages. What are my thoughts on XLF? So XLF is in chop, lower row. You can see here the JT multi is neutral, yellow, and we're getting a little bit of bullishness now. What we decided to do in XLF, and I think some of the mastery folks are still in some of these trades, is we went out and found the relative strength. Look, that's technobabble, right? We all know what an outperformer is. An outperformer, just layman terms. We go and we find the outperformer. So we crack open that ETF, XLF. We take a look at all the different heavily weighted stocks within it and say, does anything look better? Is it outperforming to the upside? And yeah, we found Wells and we found Schwab. Well, I could get into a choppy XLF. I could get into what is a little bit more bullishly structured individual boat within that tide. And that's what we did. So that's what my thoughts on XLF are. And that's the play that we've been focusing on. All right. Mike mentions what are my thoughts on C? It's not a relative outperformer, and it's south of the 200. And the trend that preceded the chop was bearish. So it's a little tricky. You've got 65 calls last week when it was below 64. I have a target of 68. So Mike, not knowing what caught your eye to begin with, please take what I'm going to say with a grain of salt. I don't know what the trigger was. I don't know what the logic behind the entry was. So I'll say this. I mean, you've got resistance at 66.5 by way of the 200 exponential. I like to use a simpler propulsion for that. The next thing, and you'll see we're above that today. So you're closing the distance to 68, which is great. Your 68 target, I mean, frankly, you could probably, as long as you're looking for a move higher, you might see 68.5, quite frankly, right? But be careful, because this market's in chop. The trend that preceded it was down. So there's a chance that there's going to be sellers wanting to take advantage of a quote unquote overbought name. Your best bet is just to watch XLF. Your best bet to see break the 200, which it will on the open, looks like, and continue moving higher is going to be the XLF itself, and that tide lifting all boats. So it's reasonable if XLF continues to move higher. Okay. All right. Hope that makes sense. All right. Next up is, I'm just about out of time here. As far as emails, a trader. So the best way to get a hold of me, gang, is in one of the rooms or here in Charts and Coffee. My email box, as y'all can imagine, is pretty darn full. Our customer service and the folks who help us traders here at Simpler Obviously they do their best, but the best way to reach me is in the rooms or here in Charts and Coffee. I try to keep up with emails, but it's a pretty daunting task. There's a lot of them. So what I tell everybody is this: if you have a question for me, you can send me an email, but put the question in the subject line. And because if it's a I get a lot of great questions, and there's 6 and 7 paragraphs, and I'm gonna end up putting them off till the weekend or till I can sit down, read the email, and send a thoughtful reply back. But if it's a quick question, if it's a question that has a chart, far easier for me to just even over lunch and answer on my phone. So if you want a quick reply, put the question in the subject line, and I try to get back to those as quickly as possible. So if not, Charts and Coffee or any of the room sessions, I do a Q&A session on Fridays. So, just reach me in one of the rooms, and that's probably the best way for me to give you a really great visual answer. And I do appreciate the emails. I absolutely do. But it's just me here in the office, and after a day of trading, I do my best to keep up. But just sometimes there's just not enough hours in the day. I appreciate it. As always, thank you for showing up to caffeinate and dominate each and every morning. I'll see you all tomorrow, 9 a.m. As always, smash that like button on the way out. Grab that tops layout from the room drives, or head on over to Countdown Trader. Download those indicators for free. Heck, I think right now we don't even ask you for your email. We just want you to get these automated tools on your charts, because I know they're going to help you make better decisions. And if you're also thinking, well, Rog, how do I sort of put the pieces together? What have you been doing with these indicators? Mark it down on your calendars. March 9. I'm going to be walking you through what I do with the tops layout. It's not a class or anything like that. It's going to be actually sharing with you what we've been doing in the Sector Secrets Mastery. All right, gang. I'll see you tomorrow. Be good to each other.